What's up, everybody? We'll be back here with part 2 of the Palantir earnings call breakdown. I'm wearing the same thing because I just did part 1. So let's get back into it. They're about to go over some more numbers.
Thanks, Sean. We had an outstanding third quarter, achieving a Rule of 40 score of 114, our highest ever, by 20 points. We also generated our highest ever reported revenue growth rate of 63% year over year, exceeding the high end of our prior guidance by 1,300 basis points and representing a 3,300 basis point increase compared to the growth rate in Q3 of last year. On the back of this extraordinary strength, we are guiding to revenue of $1.329 billion in the fourth quarter, representing 13% growth quarter over quarter, our highest ever sequential revenue growth guide, and 61% growth year over year. We're also raising our full year 2025 revenue guidance midpoint to $4.398 billion, representing a 53% year over year growth rate, an 8-point or $252 million increase over our full year 2025 revenue guidance last quarter. In addition, we're raising our full year U.S. commercial revenue guidance to an excess of $1.433 billion, representing a growth rate of at least 104% year over year, a 19-point increase over the guidance we gave just last quarter. Accelerating demand for AIP continues to drive the outperformance in our U.S. business overall, which grew 77% year over year and 20% sequentially in the third quarter. Our U.S. commercial business grew 121% year over year and 29% sequentially, and our U.S. government business grew 52% year over year and 14% sequentially. We delivered these exceptional top-line results while also achieving our highest ever reported adjusted operating margin of 51%, exceeding the high end of our prior guidance by 500 basis points and highlighting the unit economics of our business at scale. Our revenue and profitability drove a 20-point sequential increase to our Rule of 40 score from 94 in the second quarter to 114 in the third quarter. On a trailing 12-month basis, we generated $2 billion in adjusted free cash flow for the first time in the company's history. Turning to our global top-line results, third quarter revenue grew 63% year over year and 18% sequentially to $1.181 billion. Third quarter U.S. revenue grew 77% year over year and 20% sequentially to $883 million. Excluding the impact of revenue from strategic commercial contracts, third quarter revenue grew 65% year over year and 18% sequentially, and third quarter U.S. revenue grew 78% year over year and 20% sequentially. We closed our highest ever quarter of TCV bookings at $2.8 billion, up 151% year over year. This eclipses our prior highest quarter of TCV bookings just last quarter by nearly $500 million. Customer count grew 45% year over year and 7% sequentially to 911 customers. Revenue from our largest customers continues to expand. Third quarter trailing 12-month revenue from our top 20 customers increased 38% year over year to $83 million per customer. Now moving to our commercial segment. Third quarter commercial revenue grew 73% year over year and 22% sequentially to $548 million. This is the fourth consecutive quarter that revenue from our commercial business has been larger than our U.S. government business. Excluding the impact from strategic commercial contracts, third quarter commercial revenue grew 77% year over year and 22% sequentially. We closed $1.4 billion in commercial TCV bookings, representing 132% growth year over year and 32% sequentially. AIP continues to drive existing customer expansions and new customer conversions in the U.S. Third quarter U.S. commercial revenue grew 121% year over year and 29% sequentially to $397 million. Excluding revenue from strategic commercial contracts, third quarter U.S. commercial revenue grew 126% year over year and 29% sequentially. In the third quarter, we closed $1.3 billion of U.S. commercial TCV bookings, representing growth of 342% year over year and surpassing the billion-dollar mark for the first time. Over the past 12 months, we closed $3.8 billion of U.S. commercial TCV bookings, a 217% increase from the prior 12 months, highlighting the demand for AI production use cases. Total remaining deal value in our U.S. commercial business grew 199% year over year and 30% sequentially. Our U.S. commercial customer count grew to 530 customers, reflecting growth of 65% year over year and 9% sequentially. Third quarter international commercial revenue grew 10% year over year and 5% sequentially to 152 million. For international commercial business, we continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond, but remain focused on accelerating the growth in our US business. Revenue from strategic commercial contracts was 2.9 million for the quarter. We anticipate fourth quarter 2025 revenue from these contracts to be between 2 to 4 million compared to 9.6 million in the fourth quarter of 2024. We anticipate 2025 revenue from these contracts to be less than half of 1% of full year revenue. Shifting to our government segment. Third quarter government revenue grew 55% year over year and 14% sequentially to 633 million. Third quarter US government revenue grew 52% year over year and 14% sequentially to 486 million. This growth was driven by continued execution in existing programs and new awards reflecting the growing demand for AI in our government software offerings. Third quarter international government revenue grew 66% year over year and 16% sequentially to 147 million, bolstered primarily by our continued work in the UK. As previously mentioned, we closed our highest ever quarter of TCV bookings at 2.8 billion, up 151% year over year. Net dollar retention was 134%, an increase of 600 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q3 of last year as we see the effect of the AI revolution. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our US business over the past year. We ended the third quarter with 8.6 billion in total remaining deal value, an increase of 91% year over year and 21% sequentially, and 2.6 billion in remaining performance obligations, an increase of 66% year over year and 8% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 84% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was 601 million, representing adjusted operating margin of 51%. Q3 adjusted expense was 581 million, up 8% sequentially and 29% year over year, primarily driven by our continued investment in AIP and technical hiring. We continue to expect expenses to increase in the fourth quarter as we remain committed to investing in the product pipeline and the most elite technical talent, all while delivering on our goals of sustained GAAP profitability. Third quarter GAAP operating income was 393 million, representing a 33% margin. Third quarter GAAP net income was 476 million, representing a 40% margin. Third quarter stock-based compensation expense was 172 million, and equity-related employer payroll tax expense was 35 million.
All right, sorry, I'm gonna stop it right here. He is giving a ton of numbers, and you may not know what these numbers mean. They may be going over your head. Some of them going over my head, but he also talked about the Rule of 40, which is a metric that they came up with for Palantir to talk about their year-over-year growth revenue. Okay, so that's what that is. He talked about revenue from AIP going up 73%. He talked about their operating margins, 51%, a $2 billion cash flow. He said the first company to do that. He talked about revenue from Asia. He talked about revenue from the US government up 55%, from international governments up 62%, with primarily it coming from the UK. But he did talk about their numbers, not including, number one, contracts of less than 12 months or 12 months or less. So they only count, I think, more than a year or a year or more. I'm not sure. But he said it is common. And he said the other one was where contracts got canceled because of a convenience clause. And he said both of those are pretty common. So he's letting you know they're actually earning more money than what he's reporting. They just didn't factor that in to the actual numbers here. So let me let him keep going. They don't have, what I was doing was checking to see if they had chapters in here so I could skip to the next person. But they don't. So just bear with me a little bit.
Third quarter GAAP earnings per share was 18 cents. Third quarter adjusted earnings per share was 21 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 114% in the third quarter, a 20-point increase to our Rule of 40 score from the prior quarter, and our 9th consecutive quarter of an expanding Rule of 40 score. With the increase in our 2025 revenue and adjusted operating income guidance, we are now guiding to a Rule of 40 score of 102% for the full year. Turning to our cash flow. In the third quarter, we generated $508 million in cash from operations and $540 million in adjusted free cash flow, representing margins of 43% and 46% respectively.
Hold on, let me try and get to Alex.
Operations guidance to between 2.151 and 2.155 billion.
Alex Karp is the
We're raising our adjusted free
CEO.
cash flow guidance to between and Marks.
Okay, there we go. Alex Karp is on there now. Alex Karp, here we go.
Greetings. By any normal or even reasonable standard, these are not normal results. These are not even strong results. These aren't extraordinary results. These are arguably the best results that any software company has ever delivered.
Let's go.
And that's not hyperbolic, despite what your analyst friends may want you to believe, because they've been wrong at every price. They're wrong at every single round. But of course, they're persuasive, and they're not investing their own money. But
that's a big one.
A normal enterprise company should not have a Rule of 40 above 100. A normal enterprise company at our base should not have over 100% U.S. commercial growth, should not have 77% growth in the U.S. And by the way, that growth is being held down by a stagnant Europe, which is still a significant part of our business. So the pure, unvarnished numbers are 77% growth off of a massive, significant base with very significant cash flow, with a company that throws off a Rule of 40 of 114. And then, if this world was at all sane, every single person in the financial world would stop and say, how did this happen? How did a company which stood by the American warfighter, Marines, special operators, people in clandestine services, who stood up for our right of free speech and was really the first company to be completely anti-woke, how did this company stick up for the American warfighter, actually give normal Americans venture quality results? So one of the issues we have with the arbiters of truth is it was the American worker that we supported and the American worker that we helped make rich. And the arbiters of truth somehow did not participate in that because they were such experts. And of course, but what these numbers show is doing that and taking the American worker along with it, and doing it in a way that foreshadowed the future. FDE, Ontology, Foundry, making each specific institution, making the American warfighter fight the way the American warfighter is born to fight, empowering the tenets of being, free and having the ability to do creative things in the battlefield context, and then taking enterprises, instead of selling them commodity parasitic software with a massive sales force, with a kind of lumbering, jargon-bearing leaders offering you steaks and dinners and other things we shall not mention, in order that you turn the high value revenue of your enterprise over to them in return for these accolades. We created direct alignment with our customers. And what does that mean? It means when our customers have a unique and tribal way of doing something, whether it's underwriting or fighting or making workers even more valuable, we put an FDA, we orchestrated an ontology, we take the tribal understanding of their business, the specific nature of their business that makes them particular and valuable and lethal, and we empower that. And how do we participate in that? Unlike seemingly in the most obvious way, we are downstream from the value creation. So when you see 141 or you see 77% or 63, and you ask, and by the way, with really a workforce that is not growing in any way linearly proportional to that growth, and also with a sales force which is declining, which seems improbable. The reason why that's working is because we are making our clients more money, or we're making them more dominant on the battlefield, and they're paying us a subset of that. And this is why these numbers are so extraordinary. The sociological and political version of this should be, wait a minute, how can we learn from this? How can we implement institutions? By the way, we have all these people talking about an AI bubble. I'll tell you what 114 proves. There is a massive part of the AI market that actually cares about value creation. And that's the part we own. And we own that part because to do this, you have to have FD orchestration, you have to have ontology, and you have to have foundry, and you have to have access to the game. And you have to have deep understanding of how to do that. And you have to have done this for a very, very long time with products. By the way, and then the products are getting better and better and better and better. And I'll let Sham talk about what we're doing on the battlefield to the extent that he can, but you see the very similar trajectory where we're giving America, both in industry and in government, a massive unfair advantage. And again, you see it, like if you look at our numbers, look at how poorly Europe is doing. Look how well America's doing. Look how we're doing this. And again, it's not just top line. The rule of 114 that we have shows top line and bottom line growth that is distinctive, massive, and unique. And on top of everything else, there is this issue in the U.S. that we're all focused on at Palantir, which is what portion of the GDP growth that we're blessed to have in this country, meaning GDP growth defined or helped out and bolstered by AI, what percentage of that is available to the American worker? And so when we're AI GDP availability for the American worker, meaning do they participate in this growth, or is it just people around this table who are getting richer and richer? And then you see our platform on the battlefield, as Sean was mentioning, the people doing the coding in AIP are vocationally trained, smart Americans with specific knowledge. They don't have, and actually, and the people on the factory floor, very same thing. People across the nation, truck drivers, anybody with specific domain expertise is more powerful, more valuable in our product than they were yesterday. In fact, the real misalignment of AI is with people with commodity, like high-trained elite institution, general specialists. That's just not as valuable as it was. And yes, the destructive, positive destruction of capitalism is going to put that class of people, typically the class of people that also is kind of skeptical of Palantir, under enormous pressure. But it is what I see in these numbers, and what I think we see in these numbers is, to put it slightly over the top. Yeah, we were right, you were wrong, and we are going to go very, very deep on our rightness because it is exceedingly good for America. It's exceedingly good for the American economy. It's as good for American workers. And you know what? I really enjoy turning on TV and seeing some analysts explain why some other company is better than ours simply because they didn't make any money on our company and probably aren't. And we're just going to keep going. And
Yo, he is killing it right now. He is not afraid to say stuff. Let him finish.
Going and going. And then we're obviously not going to forecast for next year, but I would say, if you're thinking about how this company is going to go, look at our ability to value create, look at our ability to create revenue on the top end, look at the unit economics of our business. If you're a technical expert in how do you evaluate business, evaluate those numbers against any other business you've ever seen, and then make your decision. But yeah, I'm wildly enthusiastic. I think we're wildly enthusiastic. And thank you for those of you who stayed with us to enjoy these numbers, especially Palantirians who work day and night to deliver these kind of numbers.
This video.
All right, that's perfect. Let's pause this and get her off the screen. This has nothing to do with the video. But listen, that's Alex Karp for you, man. He is the CEO. I think they said he's the co-founder as well of Palantir. I know he's been CEO since about 2004, I believe. Let me see if we can find it. Okay, since its inception in 03. So 03. Which y'all can see I'm using the AI overview. I could just use AI mode. uh, this is going to become the new Google, folks. Like you might as well use it. You might as well use it. I'm telling you, if you don't start using this stuff, these tools that are presented to you, you're gonna watch the world pass you by, just like the automotive industry in Detroit watch robotics come and take their jobs, right? And 80% of them were not prepared because they didn't think it was really coming. So, Alex Karp, right? He did speak about the EU having stagnant growth, and they still did 104% year to date. He keeps saying 114. I don't know what that number is, but he's saying they're an anti woke company. They won't do it. They won't do the woke stuff. Whatever that means to you is what it means to you. But I think we all know what woke stuff means. He didn't give any detail, so I can't delve into any detail because I just say allegedly. Um, they have supported and made the American worker rich. They have not sold out to the rich, letting them own the company if they just do kowtow and stuff like that. He said they own value creation within the AI bubble, giving in America an unfair advantage to other countries, especially like European nations. He talked about having GDP growth, and then here's one. Two things I'm going to talk about explicitly. He talked about having specific expertise. Now, I thought where he was going to go with this was going to be the recent conference that he was at, where he specifically told people that he thought college was a waste of time. He thought college was a waste of time. Basically, college is an industry. What they do is they have you take all these extra credits that you don't even need when all you came for was the computer science degree, and then making you take the history of dance, which has nothing to do with your degree. I'm using that as an example. He didn't say that specifically, but he did say college was a waste of time. And on that note, NVIDIA's CEO, Jensen, I always mess up his last name. I think it's Jensen Hong, but he looked at Mark Zuckerberg, and this was not a slight to him. He said, you know, if I knew then what I know now, I would have dropped out of college like you did. And so these CEOs, oh, and by the way, NVIDIA, I know this is Palantir's call. They had a fantastic year. I take nothing away from them, but I will mention this. NVIDIA is now a $5 trillion company. Now, Palantir and NVIDIA are doing business together, so not a bad two to have in your portfolio. I do. However, he did say specific expertise. Like, so if you go to college for your CDL, your commercial driver's license, so you can drive 18 wheelers and things of that nature and be in the transportation industry, you're not learning the history of dance. You're not learning mathematics 101. You don't need that. You go to school for a specific thing, and that's all you learn. And he's saying that kind of stuff has way more value than going and sitting and having to take 60 extra credits of something that you do not need, all so that college can earn money off of you, that you're going to have to be responsible for paying back. And then the second thing he said, and I love it because he was swinging for the fences here. You can tell, like, he is not afraid. You could tell a couple things about this guy. He is confident in his company. He is confident in the product they produce. He is confident that that promise is becoming performance. He is confident in the people that they have helped. He is confident in people that he can help. He is confident that if you do not get on the bandwagon of AI and Palantir, you will be left behind. Thus, he mentioned these analysts that are trying to tell people on TV that other companies are actually better than Palantir. He said it's probably because they did not earn a lot of money with us or any money with us, because basically they bet against us and they were wrong. They lost. This guy's confident. This is the kind of CEO you want. If you listen to him, he's hitting the table every time he's making a point. This dude speaks very poignantly. I said that wrong. Poignantly. Y'all, if you don't know what I mean, it is a word, but he's phenomenal. And he's confident, and I love it. That's the kind of CEO you need to fall in behind if you want to own a part of their company. That's the kind of CEO you want, and you know there's innovation coming with that. So with that, we're going to end this video, and I will come back with part 3 in just a minute.